So in this video, I'm going to be going over real estate investing 101 for beginners. I'm going to go over how to look for a really good investment property. Also, I'm going to show you two different ways to go about real estate investing that's really simple for beginners to get into. Now there's 100 different ways to do this, but I'm going to show you just two of them. And if you don't know who I am, my name is Meredith Silk. I'm the owner of Silk Mortgage. I've helped hundreds finance real estate. I'm an investor myself, and I'm also on a mission to make the mortgage process smooth and simple for people while offering the best rate guaranteed. So let's get into it. Okay, so here are three basic things that you really need to know when you're getting into real estate investing. Number one, you need to identify the location where you want to invest in, and you really need to be very familiar with that market. What I do is I break it down into A, B, C, and D, the locations in that market. A is going to be the really high-end areas, D is going to be the low end, and B and C are going to be your middle areas, and those are best for buying and holding. Now you can fix and flip and wholesale all four of these, but B and C are going to be the best for your rental properties. Now, number two, you need to identify the type of property you want to buy. Now, the perfect scenario is going to be you want to buy single family homes or even multifamily homes that you can fix up and you can add the value back into it. And number three, you need to know how to evaluate the deal beforehand, before going into it. So you need to know the purchase price, where you need to be at, if the house needs renovation, what the after repair value is of the house. And three, you want to look at the market rent in that area. So then you'll be able to determine, should I fix and flip? Should I wholesale this deal? Or is this going to be a really good buy and hold and be a really good rental property? Okay, so I'm going to go over a really good loan option that almost anyone can get approved for, and this is really good if you don't have a lot of cash on hand or if you don't want to put all your cash into one property. This is a really good loan. It's called a DSCR loan, and they don't look at your income, they don't look at your debt, they don't need tax returns, pay stubs, anything like that. They strictly look at the rental income that property is going to generate, and that's how they qualify you. So here's what you need. You need 20% for a down payment, credit score at least 700. Now, if you have a little bit lower credit score, you can go down to a 660, but you will need to put down a little bit more than 20% to qualify. And you must own your primary residence, and the rent value of that property needs to wash out, needs to at least cover the mortgage payment to qualify for this loan. And how they do it is, once you're under contract, they have an appraiser go out to the property. They will analyze the market rent in that area, and that's how they come up with the rental income for that house. So this second strategy is turning your primary residence into a rental property, and this is a good strategy if you don't have 20% to put down on an investment property. This is a good way around it, and also this is what I did personally. So number one is you want to live in the property for at least 1 to 2 years and slowly renovate it while you're living there, and two things will happen. Number one, you're going to increase the value of your house, and number two, you're also going to increase the market rent value as well. Now, if you've bought your house within the last 12 to 24 months, chances are that you have a high interest rate, so you want to start looking into refinancing now so you can bring the interest rate down, so you can bring your mortgage payment down so that you can cash flow the property a lot more. Number two is you want to start marketing your house for rent. This can take anywhere from 30 to 90 days, so you want to start upfront. And you'll want to hire a really good real estate agent that's familiar with your market. They will be able to tell you how much your market rent that you can charge in that area. And two, they'll also hire a really good photographer. They'll take really good pictures. This is very important to market it well. They'll put it on realtor.com, Zillow, and also the MLS so that you can get tenants in there and interest. Number three, at that point, you'll want to buy another house, and you'll buy it as the new house as your primary residence so that you'll only put down 5%, move into that property, live in it, repeat the process again, live in it for 1 to 2 years, and then you'll slowly be able to build your rental portfolio. So if you're wanting to invest in real estate, it's important to start the planning process now. So I hope you found this helpful. Consider subscribing, and I'll see you on the next one.